Good evening, ladies and gentlemen. Welcome to the next bar. I just need to reposition myself there. There we go. That's better. Hope you're well. Hope you're good. Hope your Tuesday has been wonderful so far. And as always, wonderful to see you here with us tonight. Let me just switch the noise box off next to me so we don't get interrupted. So obviously, I've got my partner in crime, Cam, with us tonight. Welcome, mister. How are you doing today?
I'm great, Mike. I'm great. I hope everyone's doing well. And yeah, we're in for another. Well, it's first of the month, new month, a new star, and a new Trump message. So,
isn't he wonderful? He
yeah,
gives us plenty to
incredible,
talk about. Bless him.
incredible. But yeah, otherwise all good.
Okay, that's indeed right. Let's get on with it, eh? Let's just and as always, we'll start by just having a little look at what's driving markets right now. So there's the dude himself. So we're hitting new equity highs then. Who would have thought it?
Yes.
Despite everything that's been thrown at markets with a vengeance over the last few weeks, conflicts and tariffs and all sorts of wonderful things, we're still last night's, I think it was the S&P 500 and Nasdaq hit record highs. Was it last night?
Yeah, it did. It did. We're just in a sort of a little bit of a grind higher, aren't we?
Yeah.
But I did note that it can be, anyway, we'll come into that. It can be a little bit typical for the summer, particularly at the moment. But yeah, given what was going on behind the scenes and given that we had that missile attack, which was only a week ago on last Sunday, the market just absolutely bounced back.
I did.
Very, very quickly. So yeah, new all-time highs. And one thing, I mean, it may be interesting to get your take, Mike, on, like, I've been watching the VIX, the volatility really has dropped off there. We're sort of almost on the lows on the VIX. And, when you see that, you can see these little sort of grinds to the upside, because they're not big days that we're seeing on the American markets. They're just grinding away, aren't they? Higher.
Absolutely, a great way of describing it. But yeah, I mean, that is, as you say, it's sort of typical that the VIX is just coming down and down, not in leaps and bounds, but reflecting that grind higher, which is really sort of really interesting. Of course, we've got plenty of stuff coming up as well, which the market may just brush off again. Obviously, we've got trade talks back on the agenda. Obviously, China's a month behind everyone else with its 90-day pause, but that is coming up imminently. And obviously, the Europe and Canada seem to be in Trump's crosshairs at the moment. So watch this space really on Truth Social, I guess, with that one.
I think so.
And one of your favorite topics, of course, is the Trump versus Musk X bromance. You're going to talk about that in a little more detail, but obviously Musk has got his bee in his bonnet about the oh so beautiful bill, big beautiful bill. Sorry, that was that moved through the next stage, didn't it? Last night it got through Senate for its latest set of revisions.
Yeah. No, it's interesting that they both can't keep their mouths shut. Really, they just keep at it after falling out and then making up, and then I saw Elon on the side throwing a little bit in there, and I thought, oh, I wish if he would just keep quiet here. But yeah, we'll cover that a little bit later, and then the stock looks stock's getting a little bit hammered, but again, is that just a buy opportunity? I'll cover that later.
Yeah. Indeed. Fed's still on track for a September rate cut. I think that's pretty well priced in. The only debate, of course, is whether Trump and Vance's explosions on social media and every interview that Vance seems to do. He seems to make reference to it. Whether that'll influence a July cut, but it's not looking like it, is it? Really, at this
I mean,
stage.
probabilities no at this stage is a no, isn't it? I mean,
Yeah.
I think I looked at it last week. It was 20% or something. I can't remember, but it was low.
Yeah.
It was basically it's not going to happen. So I think we just keep an eye on it. I don't think Powell's going to fold for the guys.
Absolutely.
But you know, it seems that it's definitely on for September, and even I think even it was JP Morgan came out yesterday or today saying that it could be 6 rate cuts next year. So let's see.
Yeah, I think last time I think there's still 2 telegraphed by Jerome Powell last time he spoke when he was in front of the Finance Select Committee, I think last week. So, but it'd be but I didn't see that with the potential 5 rate cuts next year, but that wouldn't surprise me, I guess.
Maybe look it up.
Obviously, data pending. But yeah, I'll have a look around for that. I mean, obviously, we've got non-farm payrolls this week in what's a shortened week, obviously because of the 4th of July. So that's Thursday, I think that comes out. It's going to take a dramatically soft number for that to have any influence, I'm guessing. So it would have to fall through the floor really for anything to sort of say, right, okay, we need to do something about this. But yeah, and then of course the USD continues to fall. About February 2022, I think it was last at these levels. So no respite for that, which is sort of interesting. I guess from that, one of the noteworthy factors has been that Bitcoin that gold hasn't rallied on the back of that further drop. I haven't looked at it in the last few hours, but it certainly, that drop to 3,300 and a little bit below was sort of interesting. Let me just have a quick scan and see what's doing right this moment. Copper's been very strong, which is interesting. Maybe do a deeper dive on that next time. Yeah, it's having a good day at the office today. You should see that. Is that chart come up okay?
Yeah, we can see that.
So you can see it's sort of bounced off that sort of support there around about 3,280, and a good day today. As you can see there, pretty well straight run up. Yeah, maybe gold's something to look out for if it breaches this 3,350 again. 3,350 just seems to be a really key level with gold. Up on the 4-hour, you can see here and here and here and here. So that 3,350 looks interesting.
Mike, are you putting up the gold Bitcoin chart later, or if not?
Yes.
You are. Because I just thought, I wonder what's happening with gold Bitcoin, and I can see a very good sell there from.
There's Bitcoin today, which seems to have a reverse impact, which just is interesting again. But it is stuck in a range pretty well near. Pretty well near record highs there.
Yeah, again, the 4-hour hit the RSI and put in a reversal there, and has dropped considerably. So we could maybe, it's dropped it's almost 4.5% since yesterday.
Yeah, so it's breached yesterday's low, which is sort of interesting, I guess. At around about that 106,700 level.
Yeah. So okay, we'll watch on with that one.
Just there's copper. If anybody's there's the next level I would suggest on copper at 513. That's record highs back here early March. So that's sort of interesting. As I said, we'll probably do a deeper dive on copper next time we get together. Here's what the Nasdaq looks like. I should have just, should have just put chart, but as you say, there's that grind higher that you were referencing there, Cam. But you've got some
Yeah.
interesting things to share on the Magnificent Seven versus the S&P 500.
Yeah. So, okay, we'll jump into this because I think Mike said to me at the end of last week when as usual we decided that we will wait till probably this morning to create the agenda just to see what was happening. But I think quite a few of you asked in of how maybe how do we look at choosing stocks, and this was something that I brought up at the Go Markets conference. That one of the main things for myself, the key things, and it's probably not going to be the answer you're looking for of we're looking for PE ratios and so on. My focus is always who is the S&P, who is going to be the Magnificent Seven in the next 3 to 5 years. Who we know who they are now, but who are going to be in that period, and where is the market going, and what's going to be the biggest drivers for the market? So for myself, it's AI, it's energy, it's robotics, and autonomous vehicles. And I've probably forgotten one of those. Now, if I look at the Mag 7 at the moment, why do I like to look at the Mag 7? Because so we look at the S&P 500. It's gained like sort of 90% over 5 years, but yeah, 70% of that, really, the Magnificent Seven were responsible for that, even though they've got a weighting of about a third of the actual stocks on the S&P 500. So they're producing sort of 70% of that 90% coming from 7 companies. So where do I want my money to be? And actually, maybe in another presentation, we can pull in some data of actually how many stocks over a long period of time actually drive the market. Most stocks are actually zombies. They don't make any real return. So I always like to think about that 80-20 principle that goes around. It seems to work for everything, that you'll get 80% of maybe your profits in a business from 20% of your products or services or whatever, and it tends to ring true in most things. So for myself, that's where I'm focusing. I'm focusing on those aspects of AI, energy, and robotics, and autonomous vehicles. And then I want to see, okay, well, what companies are potentially going to be the drivers in that, and what companies do we have now? And then if we dig a little deeper, I think on the next slide, Mike, we can dig into the Magnificent Seven and look at, well, who really has the returns from the Mag 7. And basically you come out with it, and I should have probably done what are they on a percentage term. Maybe I didn't, and this is just to May because I did it on the Go Markets presentation. And if you've seen this before, the old adage, repetition is the mother of skill. It's always good to see things a few times. And for myself, that's why I'm so involved with Tesla and Nvidia, because they're driving the market and they meet my criteria of, AI, who's making the chips. It's Nvidia, who's using the chips. It's Tesla, and look how much profits they've driven now. And are they going to be driving those profits moving forward? I certainly believe so. So maybe it's a slightly different approach to picking stocks. I like to be in a few assets and be quite hard in those assets. Put at the bottom here, if is the 8th stock for the Mag 7 the MSTR, which is a strategy, which essentially are buying Bitcoin. Certainly, I think, if I'm not wrong, MSTR has outperformed, certainly in the last couple of years, outperformed every other stock in the market, and I'm also invested in that as a Bitcoin proxy. So the other things, so you can read into that what you will. The other things that we can look at, I do like the old Jeff Bezos. Mike, if we maybe pop to the next slide, we can look at cash flow. There was, okay, actually maybe that's not there. Okay, anyway,
I put that in the. I think I put that in the stock pick section. Maybe.
Okay. So basically, yeah, you can look at cash flow to shares, and there's something that you can look at. Okay, so we'll maybe cover that later. So, Mike, do you want me to cover this one now in terms of seasonality?
Yeah, because I thought it was really insightful.
Okay, so this is it'll be a game of two halves then for how I look at stocks, and we'll have a look at the cash flow model a little bit later on. But I got a question in from good friend and client Ed, who's been with us for quite a while, and he was just really asking about what am I expecting in July and August. Maybe some of you have been on some of my presentations before and seen that I do kind of the DAX first of the month trade. Normally on the first of the month, we see the market rally, or funds putting money into the market on the first of the month. It doesn't seasonally work or historically work on July and August. So I don't trade that trade, and it wouldn't have worked today. The DAX is trading down today, so it's a trade I avoid. And Ed was asking me, why do I do that? And just explaining that, historically, moving into July, we can see things slowing down, and again, it's highlighted by the VIX that the volatility is not there in the market, and particularly for the DAX. We normally see the market chop around a little bit. For the US markets, actually, from the end of June, so the last few days of June to the first, I think it's 9 or 10 days of July, we normally see the market rally. So I am expecting the Nasdaq to continue to move higher for the first perhaps half of the month, and then we might start seeing some markets starting to come off a little bit. Typically, the Nasdaq is positive over that period, but the DAX is not. So it is a period where I'll really look to just trade at extreme levels. In the summer, more often than not, I tend to just look at extreme levels anyway, but it will be a time when I'll be just a little bit more careful. And certainly for investments, it'll be a time when I'm starting to look to trim out. Certainly if I was in any ETFs, broad market ETFs, which I'm personally not, but I do manage for the clients, it'll be a time to start taking profits out of those, as we could potentially start to dip in August, maybe September. So, Mike, have you got that?
So there's the VIX chart that's up there.
Okay, cool.
Yeah,
so you can see that we're right on these. So it's very seasonal that this happens at the moment. The market, the volatility dries up, wages are away, people go on holiday. That happens. But let's have a look at the markets by month over the last 50 years.
This is fascinating.
And it will show you. Yeah, I'll show you exactly. So this is basically the average return in global markets by month in the last 50 years. So predominantly I focus on the Nasdaq and the DAX. So we can see that the Nasdaq, if we look at months 7 and 8, so July can be quite good. Was 1.6 and 0.6, so a sort of flattish month in August, whereas the DAX this month slightly up, and then averagely gets negated in July, in August. So there's a little bit of difference there. I think that I always like to point out the key September is historically a negative month. So most of the time we normally see some kind of selling, but that, as you can see also there's a bit of red in August as well. That selling may come in. Like last year, we saw the selling come into the markets in August time, and then we rallied from there, and September was actually an up month. But of course, this is over the last 50 years. It doesn't need to do that, but we can see that the seasonality is there, and it's a good thing just to take account of.
For sure, for sure. And of course, we've got a few key dates coming up in the next couple of months. Not only the US earnings season kicking off mid-July,
Yes.
but also we've got not only the European, Canadian tariffs kicking around very soon this month, but we've also got the Chinese expiry of their 90-day in August as well. So that'll be add an extra little interesting curveball or two, possibly into the mix. That's
sure.
great. I love this slide. I think it's just fantastic. So let's just obviously one of the things we talked about on the first session was obviously this idea of gold versus Bitcoin, and is there something in that? So what we were looking at in that session was percentage return of over time of gold versus Bitcoin. So that looked great, and we created a little indicator on MT5 for that percentage return, which mirrored what the stock chart that what was it, bar charts, was it, Cam, that you gave that from? The original gold versus Bitcoin thing. Can't remember where you got it.
I did it on TradingView. I just created the chart. Yeah.
So what I found when we created the indicator, because what we're looking for is potential crossover points. And if you look to indicate maybe when you should rotate out of one and then into the other. So the issue with that was it would depend on what your start point was. So if you start at the beginning of the year, there's no point since the beginning of the year until, I haven't checked, but maybe the last couple of weeks, where the percentage return for gold was underneath that of Bitcoin. So there was never a cross between January the 1st and now. But if you took it back the 12 months, that was the chart that Cam showed you, then there was 2 or 3 crossovers, which could have been suggestive of a rotation from one end to the other. So I tried a slightly different approach and looked to the concept of ratio. So a gold to, in the same way that you have the gold and silver ratio, and historically people have looked at that and said, right, now's the time to buy silver, or now's the time to buy gold. So that seemed like a reasonable idea, to look at the price ratio between gold and Bitcoin. So how much gold will you need to buy one Bitcoin? And so developed an indicator around that, which I'll try to put on this chart and show you the concept. Just going to have to pull our webcams out of the way. That's why you need 2 screens. So it was dual offset ratio 1.3. So it's a custom indicator. So we're going to do it on one day, and we're going to put an exponential and a simple moving average, but we're going to make them the same time, and I'm going to the same period. So I'm going to explain why that is in a moment. So here's what it looks like. Let me just get rid of these indicators. I tried to create a main chart with it, and I got nearly there, but not quite there. So if we look here, this is, let me just bring it out a little bit so you can see it. So this is a daily chart. And so this is, I'll put some side things on this at some stage, but you can see there's the price ratio during a time of Bitcoin strength. And then we get a drop off, and then we get Bitcoin re-emerging. And then obviously since the beginning of the year, as we've already discussed, Bitcoin has been, gold has outperformed Bitcoin significantly. So that ratio came in a little bit. So by putting those 2 moving averages on there, and this is an EA I developed for FX and EA, FX and indices that we're trying out at the moment, which gives pretty good returns. So you can see there the points of cross. Oh, let me just change that color. So these points of crossover, when the EMA goes over the SMA, and then it crosses back here. So cross here, and then it will cross back here. So theoretically, this would be a good time to get into Bitcoin. This would be a good time to reduce your position. Be a good time to get into Bitcoin for a short time there, and a good time to get out of Bitcoin and maybe into gold. And then we've got a cross here, so that would be a good time for Bitcoin. And then it's sort of bimbling around a little bit here. Now this is on a daily chart. You could also put it on a 4-hourly chart, or you can change the EMAs if you wanted to bias it slightly. Then you could do we could do maybe a 20 and a 30, which would look slightly different, but same principle. It would just mean that we'd probably get in here and out here. So does that make sense? So that is an asset ratio of Bitcoin versus gold on a daily. You can do on 4-hourly if you would like to. Hang on, I've got that box open. That one doesn't help. So there's a 4-hourly version, but just so you would need to work out which is the best time frame to do this on, etc., etc. But that's the principle. Now I just put on a couple of moving averages on there just to show how this could be used. And then I thought, isn't that interesting? That's not a very hard bit of coding to do. Let's create an EA. So that's exactly what I do. So this is what it does. Okay, so this is from 2023, beginning of 2023 up to June 25. Okay. So what we did was, or what I did was put in some parameters. This is me testing on another thing. Let me just do this. And let's just click on this one. Okay, so equity drawdown's quite big in 11%, but the net profit is 10.68. Let's get the results for this one alone. So there we go. So you can see here that using that simple, it only trades 15 times in that time. You're not wanting to be in and out if you're trading on a daily time frame. But there's the profit. And this is on 0.1 of a contract, like 0.1, not one Bitcoin, 0.1 of a contract. Okay, and there is the maximum drawdown. Now, for those of you less familiar with this, drawdown is, if we just, drawdown is the amount it would pull back any stage. There's the graph. So during it, we had periods of drawdown where the equity is below the balance. But generally speaking, that's a good back test in terms of the result. Now, there would be some work to do on that before you would say, hey, look, this is interesting enough to potentially trade. But it sort of demonstrates the concept of finding something that is of interest, that you've noticed that Cam did on that BTC versus XAU, creating a ratio that may work, and then subsequently moving forward and either trading it from a discretionary basis or trading it or using an EA. So that's the process. As I said, this is very, very junior in terms of but it just seemed like a logical next stage from a point of view of showing you a little bit of something fun to work on. With very, very simple, as I said, very, very simple indicators. There's the chart showing you when it got in and out during that time. So sometimes it was in for a short time, other times it was perhaps a few days longer. But those are the 15 trades over time. So you'd need to check out on the EA why it was doing this. There's obviously a really nice trade which is in place from October through to November. So that was a trade of a month. And then, so obviously, and then this is a cracking trade from February 2024 right up to April 2024. So a 2-month trade there, and got out at that point there. And you can see what happened there. So it's picked up on the ratio that things are amiss, and subsequently dropped off. So that's the play. So I'll do some more work on that if you'd like me to, just to sort of tighten that up a little bit. And I haven't tested it the other way around. So, but yeah.
So, Mike, a couple of questions then.
Shoot.
So let's maybe try and get some of the headlines there. So what is the actual period? So the period is over a year.
It's constantly changing. Oh, you mean for the back
Okay.
test?
Yeah, for the back test. The 15
the back
trades
test
are
is
over.
from early. The back test is from early 2020, January 2023 to current.
Okay, so it's two and a half years, and there's only 15 trades.
Yeah.
And what's the overall?
That fits with the longer term.
Yeah, absolutely. You wouldn't expect more than. I wouldn't have expected more than, 4 trades a year or something like that. Yeah, in that on that time frame. And then what's the overall return?
So the overall return was 10,000 on 0.1 contract.
Okay, so a 10,000 return on 0.1.
Yeah, let me just bring that.
So 0.1. Sorry, I'm just trying to think. 0.1.
No.
Like, I'm just trying to think for the guys just to think about this in a sense of how much margin would you need for 0.1 of a contract?
I can tell you exactly how much margin, because we'll look at specs. See, I tried all sorts of different ways of doing charts as well with this, but right. Okay, so on one contract, Bitcoin will cost 8,085. So on 0.1 of a contract, so it would be $808.
Right. So, if you had a few thousand in your account, you'd be probably fine, right?
Yeah. So if you look at this drawdown, so the drawdown is 2.5 grand. Now I think that could be tightened. So you would need, let's say, 3,000 in your account to account for a worst scenario. But that's worst scenario over 3 years.
Yeah.
And bear in mind, drawdown is from its current place. So it's not, oh my God, I lost
so it could be
grand.
could
So it
be
could have
positive.
already made 5 grand and pulled down from that. So it could be at 50,000 pulled down, which is, that's the way drawdown. But this was, if you look at balanced drawdown, then somebody can work out this for me. Those of you who used to make stuff, you can work out the ratio of net profit to drawdown of 252. So on balanced drawdown, that was the worst that you lost. So equity drawdown is mid-trade. Balanced drawdown is when it's closed. So that you would go with an EA. You would, if it was doing 10 to 1 net profit to drawdown, you would think this is a good EA. In this case, we've got 40 to 1, 42 to 1, if my maths is right. So theoretically, this is a very strong EA. If you want to play the bigger game or want to do 1 Bitcoin, it's really easy to test what that looks like, of course, because all we do is we go into inputs and we just change this to 1.
Okay.
And then we run exactly the same test, and it will give us the. So for your $8,000, you've got $106,000 return, and the maximum is 2.5. So it just multiplies. It's like anything. Once you've got a system that works,
of course. I mean,
then it's just a case of scaling.
Exactly, it's 10 times. But even if we just go from a very conservative perspective and say, look, you want to be a bit conservative, you want to have a bit of room. You had 5 grand in your account. It's good that 5 grand has created 10 grand of return.
You wouldn't even start there. You do this. You'd start with that, with 0.01, if it was your first time exploring this.
Sure. But it's good. I just always think it's good to kind of go, okay, well, that's great. Those are the numbers, but what does it mean in the sense of like, okay, well, what does it mean if, so it kind of, to me, says there's about a 200% return over 2.5 years, give or take, which is Great.
And then, of course, you'd have to compare that with, well, if you just put that MA system straight on Bitcoin, would it actually be better just to do that than looking at a ratio of Bitcoin versus gold? But of course, the idea of this is that you've got that dual functionality of saying, right, if there's a cross of the SMA versus the EM, if the SMA is if you like, the closest to price, you would subsequently trade gold. So that was the idea of the ratio, and that we could have cash in both. So this would be the Bitcoin component, and then you would do the same, and then you would do the reverse trading gold.
Yeah.
So
yeah, basically as a pair trade.
Yeah. So it's a pair trading concept in essence.
Yeah, which actually, Mike, as we said, everything is a pair trade. We just don't think about it as a pair trade. You're always, you're pair trading whatever currency you have with an asset every time.
Yeah, indeed. Yeah, and if you think copper might be a better bet than gold, so you shift your money out of gold and then some into copper. Sure. It's all looking at one versus another to make that decision as to where you put your cash at any time. So, anyway, that I thought was interesting, and just sort of moved on a little bit from a conversation we had before.
Sure.
That return doesn't seem that great from understanding the calculation, i.e. 800 per trade, and having 15 trades, 12k to get a 10k return. No, Anthony, it's only trading once. So it's trading that $800 once, and then $800, and then $800. So it's not, you're never investing $12,000. It's just whether you're in or out. So you're investing $800 multiple times. Does that make sense? So it's not, you wouldn't have to have 12,000 to get a $10,000 return. I hope that makes it clearer. It's a great question, though, Anthony. I really appreciate you asking it. Yeah. Does that make sense? And if you've got any other questions about that, either pop them in the channel, in the Discord channel, or even Telegram, or even, of course, we can sort of answer it another time. Right, let's do on to you, Cam. Let's talk about your discounted cash flow. So this follows on from being so rudely interrupted by slide flow earlier.
Yeah, slide control got lost there. So yeah, basically to go back to the question of how am I picking some stocks? How am I picking some assets? And I think I've kind of explained that. And I didn't see some of the questions or the answers that came in from you guys. So sorry about that. And some people saying AI is clearly the one. I think it is in the short term or in the near term. I think it will be in the long term as well. But I think what we haven't seen is the effects of robotics that will come in, I think, a little bit later. So that's to be considered, and what's happening with Tesla and their robocab, and how transportation, as far as I'm concerned, is going to completely shift over the next year or so. So yeah, AI is the obvious one. So basically, yeah, I want to be invested in those, but I want to be invested in the best companies. And for me, that goes back to two very simple companies which cover that. And certainly for robotics, the only public company you can be involved with is actually Tesla. But there's other metrics that you can use. You can use discounted cash flow, and you can see these on many of the I use something called Guru Focus. Mike, do you use any of the data providers that gives you data on stocks?
We're looking at a few at the moment to try and create a fundamental AI, which I'm going to push to the next session. Actually, we won't talk about it tonight, but there's a few that maybe I'm wondering if it would be a useful addition, guys, if we maybe put up in the resources on the Discord channel, maybe a few sites that that might be interesting to have a look at if you're looking for that sort of data.
Yeah, exactly.
Something like that. We'll have a chat about that, and because of course the reality is, and as I said, I'll talk about this next time on me, is that it doesn't really matter whether you're trading from a technical point of view or trading from a fundamental point of view. The reality is that you should always have a set list of criteria with thresholds for when it's time to get in and thresholds for when it's time to get out. Obviously, you can fine tune that looking at a chart, but essentially the decision that one asset is a good asset to be in is based on set criteria. And as soon as you can objectify that criteria, then you can start to test systems on it. And I think that's going to be a really interesting point. It leads on from the finding good sources of data to give you some of these and other metrics that may well enable you to create a trading plan for fundamental issues as well as including exits, because there's lots and lots of stuff on. What Cam does very well is he's able to articulate when is the time to not be in anymore, which for those, which is rare, I think, in terms of some of the guys who trade with the fundamentals being a big part of that decision making. Often it's a bit loose, it's a bit vague in terms of when might be enough. But obviously, those of you who know Cam and his from point of view of working in his investor program, know that's as equally as important as in many cases than the entry is. Is that fair to say?
Very much so. Very much so. So yeah, so you can have a look at some of those things, market cap, etc. And Bezos, he does like the old free cash flow as a key metric for long-term value. So those are the things that I tend to look at, but I'm normally fairly selective of the stocks that I'm in because I like to maybe have a smaller portfolio, although it has extended a little bit into a few different stocks in the last few months. But my main investments are still a handful, and coming in and out of those.
Good stuff. Alison's made a comment. Lots of focus on trading. It's a matter of choosing what you choose to look and dismiss what you don't need. Absolutely, but you can get things to do that for you as well, of course, or to make that job easier. Again, some of Cam's reports are exceptional in terms of how he brings it all together. That's essentially what you mean in terms of focusing on the right things and not. Those of you who are part of his program will know that very well, very well. So we'll flick through the FEA stuff and let's just review our chart experience. Obviously, we're on the 1st of July, so next time we meet, I'll pop another couple, but Cam's already done it. But let's just, there's Tesla for right now. So obviously it's had that pullback from around about 360, but I'll let you talk through this as part of the bromance battle.
Yeah, well, our old orange-haired friend has kicked off again. So what we've seen actually out of hours, we've seen a decline in the stock. We're out of hours trading at 304 at the moment. So what's that? We've had about a 5% drop. Let's see, yeah, about 5% drop, but we've had a lot bigger drop than that over the last week or so. So yeah, Trump has come out, about the EV mandate and basically what people get for buying EV cars. But maybe if we go to the next one, and this is a classic Trump,
I particularly enjoyed the last statement suggesting that the Doge should go and have a look at Elon.
yeah,
That was
and
particularly biting.
he might have to
It's
go
all
back
good
to his
entertainment.
country. Yeah. Anyway, look, I wrote this up for the guys, and thought I'll add in here of, it's like, well, there's the news, there's the drop, but what's the reality? The reality, as I kind of said before, I think is really that Tesla will benefit if these EV subsidies are taken away, because they're the only profitable EV company. Many of the EV companies are small, or they just really can't. They can't make the larger ones. They can't seem to make a profit. So the fact that they are profitable, if this goes away, well, great. Some of the competition will go away, and they could potentially take more market share. Yeah. So and Elon's very highly documented. Previously said he's in favor of abolishing the subsidies anyway. So it's I don't know. Maybe it's all staged, Mike. Maybe it's just all
Maybe it
staged. I
is.
don't know. Maybe it's all staged. But then, back to the subsidies and stuff like that. Tesla have repaid the government loans with interest ahead of schedule. I don't think, Ford or GM will have done that. And
No.
not that I'm not involved with SpaceX, but I'd love to be. I'd love it as a private company at the moment. But I think they would struggle. Well, you got to remember who got those astronauts back
Yes.
from space. It was the only people that could do it was Elon. So I think they'll struggle with that one. But what does this really mean for us? As ever, it's another little. We've had these over and over and over again since we've been doing this podcast, or since the beginning of the year, where we just get these disruptions. I said at the Go Markets conference, and I think I said to you guys as well, I was a buyer at 285 levels. I bought in a little bit earlier at the 315. I was a buyer this morning, and I'll be a buyer again if we go lower. So I've already bought into this morning, down at 300 levels. We'll see what the street says today. Maybe it drops off a little bit more, but basically, as you know, my levels pretty much are the same as before. And yeah, don't worry about the short-term noise. I am actually running out a bit of cash to keep buying these dips, but I'm almost at full allocation. So yeah, if you haven't already got involved with Tesla, I think it's potentially a good opportunity. But we'll just see how it goes at the open. Whether and as I said before, like normally what happens with these types of things is the noise. It's big noise. I don't think there's anything new with this one from Trump. So same with the tariffs. I think the noise reduces and the effects reduce as well. In the market, like we saw before, that when they had the last tariff situation, it just wasn't as big, and I think that
Yes.
that news is will have less effect. But let's there's always
It
another
was. It
effect that
was.
could come. But
It was always. It was almost brushed off as if, oh, whatever. It really was almost a non-event. Tariff stuff seems to be a non-event at this stage. Until the two key days, I think. But
I
anything that
think so,
comes out in
Mike.
between,
Yeah,
it,
yeah,
and this feels like another chunk of noise. It feels like the sort of Trump's got cross lob in response to Elon's criticism of his bill. So he's crossed
exactly,
out some policy
exactly.
stuff. So obviously there's going to be an immediate reaction. I think that's what it'll be.
Yeah,
I think that's what it'll be.
yeah.
Yeah. So interesting stuff. Very quickly on this Nvidia, of course, we're talking about Nvidia. So when we first met about a month ago, beginning of June, ground up a little bit, but again, like any trend, you look for the higher lows, higher low, higher low, higher low, higher low here. So you just look for these, and then of course, at the back end of last week, we got this push through 150, which I thought was an interesting level. I just had a little bit of
Yes.
a pause there. But this feels like a $200
Yeah.
stock in the next
I think
quarter.
so, Mike. I think so. I mean, I was looking to start taking some profits about 136, and I said to the guys that, hey, look, I'm just going to hold this into the earnings. We might have said it on the call as well. And then I said, look, I'm going to take some profits, maybe around 150. And then we had the annual meeting last week, and I said, no,
Yeah,
let's hold through the annual meeting, and it's just pushed through. So if we can really get this acceptance above 150,
yeah.
then yeah. I'm with you. $200, 170, something like that. I think that's where
So that, I mean, look,
we're heading.
you wouldn't be surprised to see it pull back to 150 again. But as you say,
Yes.
if we then
Yeah.
bounce off that, that's confirmation that market's happy at this level. And why wouldn't it be at
Yeah.
this stage? Looking at that.
Exactly.
And then, of course, Solana.
Yeah.
Um,
So for the again, Solana's like Tesla's my number one pick. Solana's my number two pick. And for a while it's been hugely undervalued. And the first Solana ETF just got announced yesterday, which is pretty huge. It's going to start trading tomorrow. There's 7 other ETFs just waiting approval. So pretty big. I do expect to see. Yeah, so this is my second pick, and there's the ticker for the ETF that will start trading tomorrow. So I think there'll be a massive amount of institutional adoption for this. Also, what did I do when the dip came, when we saw the US bombing Iran? I bought Solana. So that was my last buy. The dip, we're already up 15% on that. And it's interesting because Solana, a lot of Solana is actually staked. 65% of the available Solana is basically staked, so it's basically held. So there's not a lot of supply. So once the institutes start coming in and these ETFs start trading, I think that we could really see the price move. I have put supply crunch there. I don't like that word so much because people tend to go on about it a lot, and then it sometimes happens. It doesn't happen, but there is limited supply. I do expect the price to go higher. It's quite interesting as well that the new era of sort of tokenizing stocks is being done on Solana. So currently, I think I don't know if I wrote that down there, but there's about 60 stocks now that have been tokenized that you can now trade 24/7. A lot of the platforms, I think even Robinhood, I know Kraken is starting with this as well. So it's going to be quite interesting of the new method of being able to trade on stocks, and that cross pollination from the crypto side of all the crypto guys and the traditional market of seeing some of those guys getting into some of the major stocks as well, being able to be traded on the blockchain, which are also,
yeah,
as I say, done on Solana. So that's going to be interesting. And that we see sort of 24/7, as we're already seeing. I mean, I've already got a Tesla pre-market price that these stocks are now getting pretty much traded or will be traded 24/7. So and the final thing on that is we're trading about $150 at the moment on Solana. I see it going to 300 this year. So there's a hint for you that that could be a pretty good one. And we're positioned already with the guys. Eventually got in about 101 in April.
see they're up. So there's a chart on the screen. I think you should be able to see, guys. So you can trade it as a CFD as well. It should make it easy to trade.
Yes.
Does make it easy to trade if you're on MT5 with Go. It's pretty well standard as a crypto edition on most platforms, I think, these days. So yeah, and of course, because it's a there's its performance today, which is sort of interesting. Mirrors Bitcoin to some degree, I guess.
Yeah, the ETF launch spiked it, and maybe it's been a little bit slightly sell the news, or people have been waiting to get out of positions because it did drop. It dropped about we got in about 135 through the war efforts, and it went up to, I think, 160 yesterday. So a bit of initial profit taking, but it'll be interesting. Yeah. The ETF hasn't started trading yet, and there's only one. No, so again, it'll be a slow burn, but definitely one to keep an eye on. I think this has been. I think this one's been missed. I don't think it's as people realize how big this is. So I know there's a couple of questions coming in about, is it a buy? Well, look, I'm saying it's going to go to 300. So, as I said to Mike earlier, it's stick the tail on the donkey at some point, or look to buy the dips.
Yep. And look, you can use your whatever trading plans it is that you buy long. You start to look back and see if it works on something like this, and then you can make a decision in terms of whether it fits for you or not for you.
Yes, absolutely. Yeah, my plan is not necessarily your plan, but definitely it's something that you could 100% have a look at and maybe see how it's traded over time.
And why don't you EA guys have a couple of models on it and see what it does? That'd be interesting. Anyway, there you go. There's it. Oh, there's I just got you out of chart up there. Apologies, mate.
Yeah. Just again, just to show you, I think that's what. Like I can't see that, but it's about a 20% decline, 22%.
Yeah, 20% decline, and then 27.
And then just a V-shaped recovery. So these are the assets I really like. I personally I don't use any leverage on these, just as a sort of personal choice. I just think that there's enough volatility in these assets to just trade them on a sort of a non-leveraged basis.
Which that's been reflected in what you've shared with us recently. Most of the things that you've shared have had that sort of 10, 15, 20% move up without a drama. So it's a good call, ladies and gents. Sure. Is to adopt that, is to balance that leverage versus non-leverage. I think that there's a lot of wisdom in that as an approach. So look, we've done an hour.
We have
again.
It goes fast.
It does. And we've missed a few things out we could have talked about. So what that means is you can come back again and we'll talk about them then. So
absolutely, Mike.
Thank you very much. As always, your comments and your participation has been wonderful. Thank you very much. Now feels like 10 minutes. Thank you, Alison. That's really kind of you to say.
Yeah, cheers, guys. It's
really appreciated. Always your participation is fantastic in these sessions, and it's so cool. So don't forget to pop into the Discord channel. If you're not part of that, get involved in that. If you're not part of Telegram, get involved in Telegram. So we'll post the Discord channel link in Telegram, post the Telegram link in Discord, so you can take advantage. And obviously, next session is in 2 weeks' time, where we'll share some more stuff. And of course, part of the agenda there, I'll do the fundamental EA stuff then. We'll do an update on where things are at. US earnings season will just kicked off by then, so we might get some early signs in terms of whether that companies this time are in a place to make some forward guidance. And of course, we'll have the fallout from redemption. From 90-day pause part 1. So maybe we'll be in 90
exactly.
first part 2 by that stage. Anyway, thank you very much from me, and I hope you enjoy the rest of your week. We'll see you when we see you.
Cheers, guys. We'll see you in a couple of weeks. Cheers.
Fantastic. You take care, Cam. Hey, catch you soon, buddy.
You too, mate. Cheers.
See you later. Bye-bye for now. Thanks. Thanks.